Massive day for GTII today as it faces 1.9 million shares traded in today's session. Let's go ahead and go over all the time frames here because there are massive setups already set up for all kinds of upside. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so we are looking at GTII here on the monthly chart. Just to remind everybody here, and congratulations if you were able to capitalize on the opportunity that we presented here based on the 240-day thesis. Okay, so as you can see here, this was a total of 822 days completed to this candle here, which was the monthly closure that we faced last Friday. Curious time frame there, as this was the last 819-day iteration before we actually got this is the shakeout candle here, right? So we finished that monthly candle there, and then we actually started that run to the upside. So curiously enough, we have now completed that 822-day period, and we are starting to lift off here after having all of those 240-day cycles, right? So this is it's incredibly curious that it's starting with an upside, and also the fact that we touched a very important support down here at that 68-cent level, which is part of the support zone of this ascending channel. Okay, so that's an incredibly important target, and this was essentially what told us that we would start a potential upside from this. Okay, so I want to give you guys a different perspective here, okay, because there are several ways to look at this, and another way that we could have also seen the downside was on the following chart. It is actually on the following chart, and a chart that I haven't shown you in about a few months now. Okay, so this is the GTII 5-day chart. We were tracking a descending channel for quite some time now, and as you can see, the bottom side of this candle here, which is the one that we just faced just a couple weeks ago, sorry, that is the 68-cent bottom that we faced, which just so happens to be so perfect to that very resistance line, the newly converted resistance into support. Okay, so this is I mean, in a macro scale, of course, it's sometimes needed, right? So immediately from this target here, since we are testing the channel from this, we have already realized that top side target one time. And the way we did it was actually by taking a trend line from the top side of the channel all the way to the bottom side of the channel, and then you apply this trend line to the breakout point, which would be this candle right over here, right? So you can see here that the price action ended up meeting that 298 top, 297, whatever that was, very much perfectly with the psychological target. Now, let's go ahead and apply that once more, okay? So now this is, I mean, essentially that would be the target yet again, okay, based on this psychological target or price objective. I would like to point out here that we do have this was essentially the confirmation for an upside, not only for the fact that we came out and touched that shakeout zone right at that 68 cent area, but the fact that we printed a bullish engulfing down here. And we are now in the process of printing yet another bullish engulfing, which is done by actually the forward green candle engulfing the prior red one entirely with its body, okay? So that's how you are able to identify that bullish formation. So yes, this is still suggesting a continuation to the upside, team. Another reason that we were able to see that the upside was coming in, and this is something that I have mentioned before several times, okay, was the clear indication of a decline in volume, right? So we see this decline in volume, decline in price action. That is usually indicative of weakness coming in for the bears, okay, in the bearish case. Okay, so yeah, it's very much understandable in so many ways, time fractals, formation theory, statistics, geometrics, that this bounce to the upside was in fact long overdue. Okay, so now, oh, man, this is very interesting here, because this is the very highly speculated back test that I actually performed, right, of GTII throughout the entire trading history of it on the 3-day chart. Of which, by the way, I'm sorry that I'm actually doing this, right? I'm just trying to see if I have another data set, which is, yes, I have it right over here. which is the more complete one, right? There we go. So this was the back test before I was suppressed information. Okay, so you can see right down here that this iteration here was the last. That was, to me, just like it is now, that was to me the beginning of the trade. This little dinosaur shows you that this is the beginning of trading for GTII, right? So I was backtesting here on the 3-day, and you can see that I made several iterations of this backtest criteria that involves volatility versus momentum, right? So in this case, you can see very clearly that all of these iterations are missing. They're missing because there's no price action there. So there's a lot of speculation from me to that. Okay, so for example here, let's look at maybe the buy daily and see what we have. Okay, so let's see maybe the 12-hour. Yeah, take a look at that. What about this? Why would they mess around with the data like that? Look at this. First candle printed for GTII, February 1st, 2000. So on the 3-day chart, that's on the 3-day chart. Why is the beginning right there where the dinosaur is? That's not where it belongs, right? See the dinosaur here? Back. This is the very beginning. You've made your way through all available data. We hope it was useful. See? So why is that displayed in 2000? And why is my 3-day, where it's a very important time frame for me to backtest, why is that displaying the dinosaur right over here in 2014? Let's see. What's the date? Yeah, 2014, December. Yeah, that's incredibly unfortunate. And for a while, it was available, which is the reason why I have this data here. So from that data, I was able to collect backtest. So these are all the sample sets. This is the data set that we got in return from it. Out of a total 21 iterations, a total 31 iterations throughout the entire trading history of the GTII asset on the 3-day time frame, I have taken note of any time that volatility has expanded into critical expansion, followed by a contractive zone or phase, paired with stochastic momentum with an upside pivot. Okay, so that is the criteria behind that backtest and also the duration of the iteration. Okay, so the other metric that I did take into account was the amount of times that the profile of volatility versus momentum guessed the upside correctly, represented by the green lines, versus incorrectly. So now if we were to look at this data set now, we have a total of 31, out of which 21 were guessed correctly to the upside, giving us a 74% upside accuracy. Okay, so now based on this mean here, based on the averages here, we're getting an average upside thrust of about 971% upon the firing of this signal. So this is on average 22.58 days. If I were to be very honest here, this time frame here often does not realize. It actually becomes either way longer or way shorter, right? So now in respects to what's happening here, I would like to tell you that the firing of the signal actually happened back here. Right back here at the shakeout of this candle here at the opening, which is about 84 cents. So that is the firing of the signal. So it started a contraction phase, and it still hasn't touched the invalidation zone. So as soon as this does touch, if it does touch the 15% line here, then this entire move is invalidated, and it would be a different statistical upside. It would be contraction into expansion rather than expansion into contraction. So far, this signal has not died out ever since this date back here, January 17th, 2023. Okay, so if we were to apply, let's see. Yeah, I can definitely... if I were to suggest actually the opening of the signal, it would actually be here. because I see that the backtest was taken into consideration from the entrance of expansion, right? So sometimes I switch it up depending on the situation here. So the entrance of expansion was set to be here. So actually it's December 15th, 2022. Since that date, at the opening valuation of this candle here, which was at about 55 cents, that signal fired and it has not invalidated thus far. Okay, so let's go ahead and take a measuring tool here from that 55 cent and measure 971% on average. What I am going to do is actually calculate the standard deviation. I didn't know how to do that then, but now I do, right? So let's go ahead and just calculate 971. Again, I'm going to go ahead and just express to you in just absolute conviction here for you that I am not saying that we're going up 971%. I am saying that on average, this is a 971% move to the upside based on historical events. Okay, so there's a clear difference. So what I want you to understand that these are statistics. They are not certainties. Okay, team. But if we were to consider the total move for this asset, then we're looking at a target upwards of about $5.87, almost $6, which is very clearly the tweezer top right over here. You can see on the H value, which is high, right? You can hover over that candle. You can see it says 580, and the target here, 572. So it's taking us to a very confluent zone. Okay, another thing we can do is take a Fibonacci retracement to see if there's any geometrical correlation between this. So I'm going to take a geometrics from this high to this very range low and see if there's anything up there for us to evaluate, right? So just like this, let's see what we have. Okay, well, what do you know? We have the one spot 618 at 547. This is landing at 572. And we have the 580 tweezer tops. So that gives us naturally a resistance range for us to look at now. Okay, so that's going to be that 547, right, all the way up to that tweezer top. Somewhere around like this, okay? So I understand that it's just ever so slightly off. I can try to be meticulous here, of course, but it's going to be a little difficult. Let's see if we can get it. There we go. All right, and then the 580 top, right? We said for it to be right down there. Okay, now we have that absolute target realized. Okay, so we can see now the range of where we can resist from. Okay, so now that we have the total range distance, we can now see what are the most relevant resistances that we are to face. Okay, particularly here. You see how this candle here is topping out there. This candle here is topping out at the same place as this one. And then you can see several other candles here topping out right at that same top as well. That's likely a zone for us to face some resistance, which just so happens to be around 158, 160. And look at here, the knot 618, again, another golden mean at 153. So we can take into consideration 153 to about 160, let's see. And we'll do it in a very discretionary manner. At the average of almost all those candles, we can say about 177. So 153 to 177 would be the next zone for us to look at as a resistance. Okay, so let's go ahead and catch that to 177. Perfect. Okay, so now we can see that this can be a shorter time frame upside for us to face a resistance based on this signal. The firing of the signal of this volatility versus momentum. It's not to say that we're going up 971%. It's for us to evaluate the distance between current price action and 971%. We can see any of these resistant areas depending on how the overall psychology feels. So this is why I wanted to express to you how important it is to look at it in this manner. Let's move on to the next chart here, team. Okay, so you can see here 8-hour time frame is clearly another statistical play of which one of which I don't have a back test of just yet. I apologize for this video going so long, but I think it's critical for us to evaluate this before the next trading session, right? So please notice here that we have the EMA3 pitched to the upside and in the bullish control zone. This is the leading indicator. Okay, we've been talking about this. Falling wedge for quite some time now. We have a massive increase in volatility here. This is a play, usually. Okay, so now DMI. Let's see if we have support. Well, it's at 25%. What do you know? We have absolute support from DMI for the 8-hour volatility versus momentum move. And this is, this is still suggesting a massive upside to go in the 8-hour period, which just gives us even further more validity for an upside continuation here. Not only that, is that we have broken out of the falling wedge. Okay, so now let's go ahead and take into consideration here the topside targets based from this. Okay, so one of those targets can actually be figured by taking a trend line just like this from the very top side of the triangle to the very lower end of the triangle, which where I can see arguably land right about here, right? We'll take that trend line just like that. So we can apply that trend line from the breakout candle, which is essentially this one here, and that'll take us to a target upwards of about $2.23. So now $2.23, let's go back to the other chart and see if we have anything within that, right? So in fact, we do. We have the one fib located right at about 249, and that would be, that would give us now a resistance range. 223 to 249 it should be the further time frame resistance, just like this, right? We mark off the areas so that we understand where price action can lead to based on the statistical backtest. Okay, so this is how I trade, this is how I teach, and this is how I found my own personal edge in the markets. Okay, so this is looking very nice, team. Let's go ahead and continue on the analysis here. This is another way that we can tell where we can have another resistance coming up. We were noticing that we were capitulating for a while now on the monthly Gaussian channel, which is this green thing here and red thing, right? So we noticed that there is the mean band down here. Usually we are to test that mean band before a continuation to the upside. For a shorter term period, we can actually see a resistance at about 155. Naturally, let's go back to our chart and see what 155 looks like. Well, it looks like we already talked about that. We already talked about that target. In fact, right over here, we can see that we have 153 at the 0.618. We just spoke about this resistance. So now this is correlating with the Gaussian channel. It's correlating now with our discretion. So this is how we gain those probabilities, team. Okay, so I think that everything is looking massively bullish here for GTII. Let's see. Of course, there's going to be some ebb and flow on the way up, but just be careful with your assets. Okay, so now for the last part of the analysis here, so that we can wrap up here because it's reaching 17 minutes already. My apologies. Let's take a look at the RSI on all of these time frames here, so that we can see or gauge an edge. So on the 30-minute immediate short term, it looks like we have a potential downside coming in that's very slight downside. So that means that we could actually pull back from the current zone of $1.12 where we currently are. Let's see. Yeah, we can actually face a support zone anywhere between, I would say, 108 and about 102. Okay, so we're going to leave that noted there for us for future reference, right? So 108 to 102, and this is essentially the support range that we can find another loading zone before continuing to the upside. Okay, so let's go back to you see how I'm marking off these zones as we find correlation? So that's literally how I teach it, team. Anyway, so yes, we would be getting a little bit of a downside here. It's not confirmed just yet, of course. We have to just see the probabilities based on market open conditions. So now, moving on from the 30-minute onto the bi-hourly, you can see here bi-hourly is more or less upside with some slight consolidation, which means that it's waiting for the influence from the shorter time frames to validate an upside or downside. So what we want here is to cascade all of these time frames into each other, domino effect from this one into this one into this one, and so on. Right, so let's see, 4-hour time frame still suggesting an upside on the moving average. However, we're consolidating here on the RSI signal represented by the cyan line. Moving average would be SMA 14 represented by a pink line. Okay, so now moving on to the 8-hour time frame, you can see that the 8-hour time frame already has that upside pivot, still suggesting an upside, by the way. So I'm going to go ahead and just favor the 8-hour time frame since the 12-hour time frame is doing this weird little consolidation pivot here. The daily time frame is more in accordance with the 8-hour, right? So please notice here that the daily time frame has reached the bull strength percentile of the bullish control zone overall, right, with an upside pivot on that RSI. Another thing to mention here is that we have a bullish cross upside of the SMA 14 on the 3-day RSI with an upside pivot. And very, very notable here is the bullish cross upside of the SMA 14 finally for the 5-day RSI. We have been below this RSI since, let's see, March. Yeah, since March, the late March 2023. So, I mean, it's been like 4 months of just under this moving average. So it's actually quite breath of fresh air here, so that we can to finally pull out of this and break out of it, right? So very good things coming up for GTII. I must always warn you to keep your gains and keep your risk management in play here, okay? Do not give back what you've already gained from the market. Siphon whatever you can, okay, team? So and also, please, first and foremost, do not take this as financial advice. Please take whatever I do show and iterate here within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool, okay, team? But with that said, I wish you well, a very, very good weekend, and I will catch you at the bell on Monday. Adios, team.